The British economy is finally bigger than it was in the pre-crisis period. Official figures this morning showed it grew 0.8% in the second quarter of 2014, which pushed the level of output just above the level reached in the first quarter of 2008. Now, if we have a look at a chart of the UK economy here, we can see that the recovery from the recession this time round in the grey line is one of the weakest on record. 6 years of growth to get back to the level we were at 2008 is much longer than the normal period in previous recessions of about 4 years, and the much better performance at the last recession in the 1990s. Of course, output or GDP isn't everything. What matters to many people is employment or jobs. And this chart shows what's happened in this recession and the recovery period. You can see in this yellow line that actually the employment performance of the UK economy this recession compared with previous recessions has been much better. So what we've got then is we've got really strong jobs growth and also very weak output growth. Put those together and what you have is terrible output per job. So productivity has been worse in this recession and recovery period than in any period in the last 200 years or so. Of course, we might also want to look at how Britain compared with other countries. This chart shows the relative performance of the UK economy and some other comparators. You can see that Britain here in purple has now just got back to the pre-crisis peak, which is much better than Italy or Greece. Worse though than the US, Canada and Germany, which also all got back to that pre-crisis peak period in about 2011 or so. Now, so the big question for the UK looking forward is we've had a really slow recovery but very fast jobs growth. What does this mean for the future? Well, I think it means that unless productivity improves, then we are not going to have a great period looking forward. But if productivity suddenly comes back, then there's everything to play for over the next 5 years. Of course, you want an answer to that question. I think the answer is that productivity performance has been so weak for so long, we can't assume any longer that it's just going to bounce back and we're going to get the sort of growth we enjoyed in the pre-crisis period. That means that output growth in future is not likely to be as fast as it was before the crisis, and it means that we have to be much tighter with our public finances. We can't go splurging money on the public sector in the way we could when tax revenues were growing much faster because the economy was growing much faster. It's not a very optimistic outlook for the UK, but I think it is the most realistic one on which people should plan. Chris Giles, Financial Times.